What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Monday, May 1st, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. My man, did you have a good weekend?
Oh, it's a beautiful day in the neighborhood out here in West Texas. Hey, just want to give you a shout out. I got me a pair of absolutely high-speed data. I dug the ditch yesterday, baby. I got me some high-speed network in my man cave.
Yeah, you spent all weekend getting your man cave ready and Ethernet cord run out there so that you could come on the show and say, I have two. You originally tried to tell me, for everybody, he was trying to tell me he had two 900 gig lines coming out. I was like, no, it's megabytes, but whatever.
They're fast, baby.
They are still fast. So we appreciate Stu putting in all the work to make sure that we can bring you guys the show. And he was managed to actually put up a great lineup, guys, this weekend. We had a huge amount of stories, Stu. It was absolutely cooking. Lots of earnings. So this show is packed. First up on the menu, Europe is buying a record amount of refined fuels through India and paying a huge markup. This is absolutely insane to think about the Russian oil flowing from Russia to India, getting marked up and being sent to Europe. And again, the consumer takes it in the drive-through. So Stu will cover what's going on with that trade. Next, data insight: the cost of a wind turbine has increased by 38% in 2 years, to the surprise of nobody, considering what's going on with inflation right now. So Stu will dive into what some of those numbers are saying on wind energy. Next up, financing the energy transition. We need a plan to provide the lowest kilowatt hour along the path. This is a opinion article, as Stu's got a nice publisher's note on it, and we'll dive into what's going on really in the energy transition and how it's going to be financed. Finally, we will cover JPMorgan eyes First Republic after FDIC takeover. I think this has some there's a little bit to do with what's going on with the current energy markets right now. So Stu will dive in and cover what's really going on in the banking center, which is pretty insane right now. He'll throw it over to me. We'll cover what's going on in the oil and gas market, specifically oil finishing about 2.5 percentage points up, $76-ish in that range. Again, what do we see going forward this week on both that? Some crazy price action in natural gas, but it currently settled at $2.41 here before the open as we record this on Sunday. And then we will quickly round up with Exxon and Chevron earnings. It's going to be a busy earnings week, guys. Newsbeat's your best place to stay up to speed on all of that stuff. So we'll cover Chevron and Exxon. Before I hand it over to Stu, though, guys, again, www.energynewsbeat.com. It's where all of the stories we're about to cover from. Hit the description below. Take a look. You'll be able to see every story in the lineup. Dashboard.energynewsbeat.com, the best place for all your data and energy news combined. Get it while you still can. You never know where it might go. Stu does a great job of curating this website to make sure all of the top energy stories are there, guys. I'm out of breath, though, Stu. Where do you want to begin today?
Oh, mighty young millennial. What a great job. We've got some stories coming around. Europe is buying record amounts of refined Russian fuels through India and paying a huge markup. Michael, Iran taught Russia how to avoid sanctions. Iran Aslav has always said sanctions don't work. They get you in the drive-through. And Russia was bypassing Europe's so-called commodities embargo when it was selling LNG to China, which then turned around and sold the LNG back to Europe at a markup. They took that, and now India has learned from China. And India has become so good at reselling. This is a quote out of the article. Selling Russian oil to the same Europeans who refuse to buy it directly from Moscow at a much lower price. But the Asian country is on track to become Europe's largest supplier of refined fuels this month, simultaneously bringing record amount of Russian buying record amounts of Russian crude.
It's absolutely insane. That's from a data analytics firm out of Kepler, which I really do trust. They've got some great products over there. It's absolutely insane. I mean, you think about it. It's a 25 barrel discount, basically going from Brent to Ural price difference, which is about a third of the whole price of the barrel of crude oil, which is absolutely insane. And that markup is even greater when you talk about refined products, aka your diesel and gasoline. I mean, if you're India, it's a no-brainer. If you're an Indian trader, this is a no-brainer. If you're Modi.
Oh, and there's a couple. You always call these what, Michael? Second. What's you always second
order effects.
Second order effects. Bloomberg notes in this article, the development is a double-edged sword for the EU. On one hand, the bloc needs alternative sources of diesel now that it has cut off the direct flows from Russia, which are still Russia. They're still getting it. But previously its top supplier. However, it ultimately boosts the demand for Moscow's barrels, meaning and means extra freight cost and impact to the environment.
Mm-hmm.
In other words, Europe achieves none of its embargo goals, while being hit with a far higher energy prices. The secondhand smoke out of this, Michael, is simply the fact that it's going to continue to devalue the dollar, because now this is all being bought outside of the petrodollar.
Ooh. Yeah, I mean, again, it is crazy. They're trading bananas now for, you know. Now, what is this in rubles now, or is it yuan?
Both. I was doing
okay.
Yeah, I mean, it depends on which tanker. And Michael, you're going to throw up. The dark fleet is making a big difference. Go ahead. Roll your eyes for our listeners.
I will roll my eyes. What's next?
Okay. That was funny. All right. Data insight. Michael, couple things. How often when you walk to the water cooler at the office, you always hear, oh, by the way, wind energy is all, maybe not in your office, but we always hear it from everybody.
It's exactly what I hear every day at the office, that the cost of wind energy is going down. That's what's getting thrown around at my water cooler.
No, that was stupid. But other people's, we hear it from folks all the time. Data insights. Cost of a wind turbine has increased 38% in 2 years, and the cost for critical minerals is up. The average price, this is the main headline here on this, the average price of the 7 most significant critical minerals for the wind energy has increased by, Michael, drum roll, give me a drum roll, 93% out of January, since January 2020. 93%.
That's pretty insane.
That's a bad dog number. And think about how many kids are being forced into slave labor on this. Okay. A couple keynotes. For commodity traders, it's been big business across the sector, which includes hedge funds, banks, big traders like Glencore. Profits soared 115 billion in 2022.
And Glencore is one of the largest coal mine. It owns some of the largest coal mines around the world. So this is where people just, it just cracks me up that we're buying all of our critical minerals from the same people who are supplying millions of tons of coal. And I'm okay with the coal being supplied, but it's just, there's so much hypocrisy in this. It all just drips with it.
You know, and if you sit here, I'm going to get a crayon. And when I get some time to do some research, I've got several other projects I'm working on. And it says data from the Energy Monitor's parent company, Global Data, shows that the average cost required to build 1 megawatt of wind turbine capacity has increased 38% over the 2 years. This is a marked contrast to years of steady price declines as technology improved. A couple things. That still does not none of this includes the cost for the increased cost to the grid and the additional wind turbines that you have to, because Meredith Angwin, and I'm also interviewing Robert Bryce on Tuesday, for our podcast as well. And both of them have talked about the amount of extra wind power and solar that you need to add to the grid. So it's not 1 megawatt to 1 megawatt. Wow.
Yeah.
Unbelievable article. Let's go to the next one, Michael. Financing the energy transition. Follow the money. We need a plan to provide the lowest kilowatt per hour along the path. The cost of moving the energy sector toward net zero is huge, but new research reveals that companies are increasingly prepared to invest, and funding is increasingly available. Let's find out those sectors, Michael. Coming around the corner. What are energy companies where are energy companies allocating capital? 42% of energy companies are investing in energy transition initiatives. 28% now is in returns to investors and shareholders. It used to be 11%.
Ooh.
Wow. All right. Capital investments in traditional businesses in oil and gas, Michael. This is critical. It used to be 2 years ago, 32%. Now it's down to 20%. And 2 years ago, Michael, you and I had on our show, we could pull the tape. We needed trillions of dollars just to meet the decline curves if demand just remained flat. The IEA, the International Energy Association agency, said just recently, 2 weeks ago, that energy demand will remain constant for a while.
Oops. The International Energy Crime Syndicate, you mean?
Yeah. We'll leave my true thoughts alone on that in the EU. I mean, excuse me, the
IEA,
UN. Yeah,
the
yeah,
IEACC.
Yeah, the UN. Okay. How will they fund this? How will energy companies finance their energy transition initiatives? Private equity, 40%. Existing balance sheet, or Michael, I'm assuming this would be free cash flow, 32%. Equity capital markets, 29%. Data capital markets, 20%.
Debt capital markets, debt.
Oh, thank you. Thank you. Old Moses, me, friends. Bank loans, 19%. Export credit agency, 40%. Hey, I went to OSU, but that is a lot more than 100%.
I know. I was asking that. I was doing the same thing. I was like, man, that seems like
is this printing money? I gotta go do some research.
This is how you start inflation.
This has got to be printing money.
I think there's two things, Stu. I think it's clear. I think the bigger shift is this. You mentioned it in the big summit. Where are energy companies allocating capital? Returns to investors and shareholders up from 11 to 28%. In capital investment in traditional businesses, down about the same amount, 32 to 20. So it's just a flip. People are saying, okay, instead of spending all of this money in putting it into the ground, just give it back to me. Because think about it, the track record of oil and gas spending capital from 2012 to 2018 was terrible. And it's still kind of is terrible.
Right.
Drilling's a tough business. You know, spending capital and spending it wisely is a tough business. So I'm not surprised that it's flipped. I think this whole 42% investing in the energy transition, are we sure about that? Like, define energy transition. Like, are we talking about like...
I got to find out if it includes nuclear and natural gas now, because I mean, if it is, this article
EQT's then going green.
Yeah. So funny article. I was like, okay, if you peel out the coming from the bank balance sheet, that might make a little, but who knows? Okay, I got to go do some research on that article. Sorry about that. Market rally shakeout may be bullish. May be a bullish signal. JPMorgan eyes First Republic after FDIC takeover. Michael, this concerns me a bunch. The FDIC seen taking over First Republic. Banking giants, including JPMorgan Chase and PNC Financial Services, are looking to buy First Republic following a government seizure. The Wall Street Journal reported Friday night, citing sources. The FDIC asked for initial bids by Sunday. Bloomberg reported on Sunday after, I was going to say gouging, but gauging initial interest. Bank of America is mulling it. Michael, this is systemic of an overall problem. And if the government keeps bailing out banks, it's going to be an issue. What are your thoughts?
Well, this comes back to the issue of these larger banks. I think it's important to note that JP Morgan would need a regulatory waiver to buy First Republic. So they clearly think they're going to get the waiver. If they're all spending, if they're, I mean, they got their whole team working on. I mean, what's kind of funny is JP Morgan does M&A for other companies. Imagine being on the M&A deal team for JP Morgan. That's got to be an interesting deal team. I'd love to hear some stories about that. Not for dealing, but where this is all going to lead is, again, Bank of America is mulling some of the banks buying First Republic. It's much like in the oil and gas business, you're seeing massive consolidation because of just the way the equity and debt markets are structured. It favors big versus small. I think that's what you're going to see happen in the banking industry. You're going to see all of these regional banks get swallowed up by, much larger regional banks, and then those larger regional banks will get swallowed up eventually by JP Morgan, and you'll have 10 to 20 banks throughout the country. And is that a good thing or a bad thing? It's probably on average a bad thing. There may be some good things about it. You don't need to worry about, one of the advantages of having just huge banks is liquidity. You don't have to worry about a run on deposits. The FDIC then can worry about other different things. Now, having all of your deposits in one bank can also lead to massive, we already think Wall Street has too much power and too much control over our lives. Imagine if JP Morgan had all the power. Now, now I think the thing to be careful of is, in this case, yes, I actually, if I'm going to put my money anywhere, it's going to be in JP Morgan, mainly based off what Jamie Dimon has said regarding the energy transition and his stance on oil and gas. He was one of the few CEOs that sat up in front of Congress and said, moving and getting off oil and gas would be the road to hell. He did. Quote. He said that. It's a quote directly from him. Now, what happens when a new CEO takes over and doesn't believe that? What happened? The problem with centralization is you're counting on the people in charge. You may like the people in charge now, but will we like them going forward? So there has to be a balance. We have to figure out a way to ride this ship. But JP Morgan may be the only company that could buy this. So I'll be interested to see what happens. But I think that's what's going to happen. Consolidation among banks, and we'll be generally worse off because of it.
I will give you great feedback, Michael. One small thing, and you kind of said, what do you think about more big banks? It would be easier for the government to control the rollout of the Hamilton project, which is the digital currency, which is the end of financial freedom for the US. So that to me is even more scary on that part. Sorry.
Oh, you're good. The Hamilton project. But no, obviously First Republic, they're in trouble. Their stock's down, it's basically down over 100%. You got huge quarter one deposit outflows. There was an attempt to quasi rescue it, but the FDIC came in and just said, no, we're putting you up for bid right now. Someone will buy it. They won't necessarily have to go into receivership. So I think that'll be convenient for everybody, but we'll see. Wouldn't want to be in a regional bank right now.
No. Hey, off to you in finance, dude. Great job.
Yeah, I mean, it's pretty simple, guys. Oil prices traded up on Friday. We're currently sitting at $2 or 76.78. That's up $2.70 or 2.7%. Implied open though is 76.63 as we record this here Sunday afternoon. So, forces pulling on on oil prices again are going to be the overall economy. What happens with the dollar, so will go oil prices. Banks collapsing. I'll be interested to see what that does to oil prices. You can make one argument where instability in the banking sector leads to lower crude oil prices, but also you could see crude oil prices increase as it's seen as a stable, quote unquote, as something that's an alternative to currency. If there's huge flights of deposit, maybe the one thing, having a tanker full of crude oil, you're going to be able to get something for that. Regardless of where you take that tanker of crude oil, you'll be able to get some money for that, regardless of what currency or what flavor it looks like. So I could make an argument both ways, but I do see a tumultuous week for oil prices. As we looked over to the natural gas, we had some really interesting price action on Friday. We had a huge spike up all the way over $2.50, but currently settled at $2.41. That's that on total, on aggregate, was up $2 or 2.34 percentage points. Implied open $2.39. This is a great quote from Josh Elbin. He's a Raffinti natural gas analyst. He's been speculating over the past few sessions on when production might start to head downward, but we certainly have not seen that turn yet. Overall, we are back to roughly January levels. And what that means is supply has really been surprised to the upside, which has sort of forced prices down at this point. And as we move into the summer, it doesn't look to necessarily get that better. To give you guys an idea, we've got, weather does look to be a little bit lower this week. So I think that is what's supporting prices, at least in the short term, but in the long term, I think we're still in this $2 to $2.50 range. And I don't necessarily see it getting much above that. Freeport's all the way online. It did nothing. I mean, I swung and missed in that. I'll be taking one in the shorts now for a while. I think the only other interesting thing to cover this weekend is we're going to have a lot of earnings, guys. And the one thing I'd recommend is going to www.com or www.com. Go to www.com. Just kidding. EnergyNewsBeat.com. Type in earnings. You're going to be able to see all of the different earnings. First off, you're going to be able to see we've got 158 coming out. That's total S&P 500, but I think there's like 50 or 60 specific oil and gas ones. If you need to stay up to speed on what's going on with earnings, check that tag out on our website. Great place. Exxon and Chevron dropped their earnings. I thought both were obviously positive. To give you an idea on Exxon, income rose to $2.79 per share, or $11.43 billion compared to $5.84 billion a year ago. But you have to remember, a year ago, they took a write down of their Russian assets. Exxon saw its oil and gas production rise by nearly 300,000 barrels per day compared to year ago levels, including, again, those asset sales. There was a $3.4 billion after-tax write down of its Russian oil. They ended with 32.7 billion. I love how they say this in their press release. They ended with 32.7 billion in cash, but on the call, CFO Catherine Minkles said that they're not necessarily saving that cash for mergers. They'd be open to deals that could offer synergies and drive good returns to shareholders, but it's focused really on the Permian, Guyana, and its Beaumont refinery expansion. So nothing new on the potential rumors of Exxon and Pioneer, but sitting on 32.7 billion in cash. One only wonders what they're going to do with that, or maybe they have their eyes on another producer, aka Oxy, which is what I would be looking at if I was Exxon, but I'm not. So we'll cover Chevron's earnings. They were $3.46 per share, but that was only 6.6 billion. Of earnings for the first quarter. Again, that was compared to 6.3 the year before, but they did not have to take some sort of tax related charge. But they did have a $130 million tax charge related to its energy profits levied in the UK. So the first of the windfall profits tax due, $130 million tax charge related to its energy profits levied in the United Kingdom. Ooh.
Wow.
So they're getting taxed. I wonder how much BP took. We'll have to, when they drop their earnings, it'll be interesting to see. But that windfall, there's that windfall profit tax. Quote from Mike Wirth, Chevron's chairman and CEO: "We are delivering strong financial results and increasing return to shareholders. The company's return on capital has been great, has been more than 12% for 7 consecutive quarters, and the company has returned $6.6 billion to shareholders in the first quarter, an increase from 65% last year. So the first thing they tout is its return to shareholders. Share repurchase program was increased to $17.5 billion. Again, the middle finger to the Biden administration continuing to buy back stock. To give you guys an idea from a business perspective, their non-op in the Mad Dog 2 project out of Gulf of Mexico, which is headed up by BP, that project achieved first oil, looking to supply somewhere around 140,000 BOE per day when it's all online between 22 laterals there in the Gulf of Mexico. They started crude oil liftings from Venezuela, supplying 8.7 million barrels of crude oil to the U.S. during the first quarter. They had 75 exploration blocks in the Gulf of Mexico receiving winning bids on in the lease sale 2059. We covered that about 4 weeks ago, subject to obviously to final government approval, but we have a feeling that is for some low-hanging fruit carbon capture, because the next bullet point they mention is announced an expansion of the Bayou Bend carbon capture and sequestration project in the U.S. Gulf Coast through acquisition of nearly 100,000 acres of pore space, positioning Bayou Bend to be one of the nation's largest carbon storage projects in the U.S. Done. So when we talk about investing in the energy transition, if this is included in the energy transition, then obviously, yes, that article we covered about 4 articles ago, Stu, that makes sense to me about where the money, but are they buying wind farms? No. And this is a smart business move for Chevron.
Right.
In this case, I love the way they're run. I'm a big fan of them. I know people will have other thoughts about them, but I think they're making some clear strategic moves to get into that carbon capture market and cement themselves alongside Oxy as a huge player here. Love the moves.
Yeah, they took the lesson from BP and did not follow the European Total Energy and BP.
But yes, they let BP swing and miss at that one, and we're like, maybe we should reevaluate.
Yeah, oops, ruh-roh.
Oops. What are you looking out for this, Stu, as we let people go? Anything they need to be watching for this week?
Some big news coming around the corner on global front. I'll keep you posted.
Oh, a little.
You don't like it when I say that, do you?
I don't. Now I get nervous, but we appreciate you guys sticking with us. We hope you have a great Monday. We're going to let you get out of here. For Stuart Turner, I'm Michael Tanner, guys. Check us out, www.energynewsbeat.com. We'll see you tomorrow.